What's going on, everyone? Welcome to another live session. This is going to be a combination of backtesting as well as a bit of live analysis. Yeah, apologies. I know I'd set a live for Wednesday morning, but I've just been very sick this week, and so wasn't able to do that. Still sick at the moment. I'm not sure if you guys can hear. A bit clogged up. So yeah, this is going to be a quick session. I'm not trading for the rest of the week, but yeah, as a trader, it's hard to stay away from the charts. Two sessions, two trades in total this week. One long on pound JPY. That was about 5.7 R. That was a win, half risk taken. I banked about 2% on that, having closed half the position at 2R and then letting the rest to run. And then one short on pound JPY as well. The long was more of a counter trend position, up into a 4-hour order block, which I then saw price falling from. Took that short yesterday London session, and that was a 1R loss. Again, half risk taken. So that's net 1.5% for the week. Yeah, 1.5% profit up for the week. I'm about 1.8% up on my 100K account. But yeah, it's about 4.7 R up for the week. And I think that information matters to me because in the long run, the more I see consistency in my R multiple, I'll then be able to adjust my risk accordingly. So right now, yes, it's like, okay, technically over the past 2 weeks, I've netted about 9R, but that's translated into 1.8% profit, because my actual risk taken has been a bit conservative, and it's that way just for the first 3% profit that I bank on the account. So once I get to 3% profit, then I can increase the risk to 1% per trade. But obviously, again, once I start seeing consistency in that, then I might be comfortable just risking 1% from that starting account balance. So yeah, I've got 18 minutes till London Open, so I will run through these trades fairly quickly because I do want to do a bit of a breakdown on what I'm seeing essentially on EURUSD, pound JPY. Yeah, let's just see what opportunities there are. But first, obviously, these missed trades. So doing it a bit different to last week, where last week I kind of just ran through and picked up what I'd missed. This week, I've identified which positions I missed last week, noting that this did not meet the plan. The others did. But yeah, I think that's just going to save us a whole lot of time. As we kind of filter through these. So I'm just going to go basically simulate that kill zone that I missed the trade in. And we'll start with pound JPY. It was a short position taken during London kill zone on Tuesday. So we can bring this back. That's Monday. We can just bring it back to the beginning of the day here. And start on the daily. So obviously this fair value gap, price had mitigated that, come lower. Obviously then broken that structure to the downside. we are bearish then. And coming down onto the 4-hour, you can see the trend clearly bearish. We're trading lower. And so when I come to my plan, I don't know why that's so large. Let's reset that. Okay. When I come to my plan, price at or mitigated, equilibrium, premium, or discount, yes. Direction for our trend is in pro trend to the daily. Is my entry counter trend or pro trend? I know it's going to be a short, but I mean, in any case, if I even look at what we have going on, it's 4-hour bearish trend, daily coming from premium down, targeting these lows way down here. So that 4-hour is, I mean, that target is clear. We're bearish. Looking at the 1-hour, trading within this 1-hour range here. So we're bearish there. Yeah, I'd be looking for shorts here. My entry is pro trend to the daily trend. So when I come to my trade parameters, and so once I decide that that's pro trend, then I know it's an optimal alignment entry. Daily's bearish, 4 hours bearish. So yeah, now looking at the trade parameters, is the trade in alignment with the 1-hour range. I don't want to mistake and don't mistake this for being the 1-hour range. Look, you arguably could, but in the same breath, potentially can be, because we actually, this is obviously the primary 1-hour swing high to swing low, and then we came up, we mitigated that equilibrium area, and then we shifted. We obviously ran highs, shifted impulsively to the downside, forming a new bearish leg. Yeah, that this can be fully taken as now 1-hour shifted within that larger 1-hour structure. So I'll just pull that to the end, and knowing that we are the trade is essentially that parameter has already been met. 1 hour, yes, it is at EPD because we've already mitigated this 50% level, arguably having missed a trade. But I think I didn't count this as a missed trade because I took this setup last week out from there. So I won't count that as a missed trade. So now I just look for essentially protraction counter to my bias. So I know I'm looking short, so I'm looking for protraction higher, and then looking for key area mitigation or time-based liquidity sweep. So this would be the time-based liquidity sweep if we were to get one. But obviously we just need to see how price is going to develop over Asian session. I'm just doing this forecast well beforehand. And then this is, the only key area, at least on the 1 hour, that we can see this two-sided fair value gap. So price could either come up way higher and mitigate and run these highs here. Obviously, then just pulling back deeper into EPD with this optimal trade entry area resting just above this time-based liquidity sweep within two-sided fair value gap. That would be ideal. Stops then placed maybe above that 79% level to sell off, or we could be just looking at price protracting within this area here, and then from there selling off. So it just all depends on how price is going to develop over this Asian session. And then, yeah, can look to take that lower. Okay. So yeah, slowly correcting higher. I think just given how corrective we've been, can mark that as a valid time-based liquidity sweep. We are right before the kill zone open. We are protracting, but I want to see what's going to happen at least one or two candlesticks into this kill zone. And mind you, I marked this out last week, but I haven't really analyzed, what happened in preparation of this. I just noted that it was obviously I saw where the entry was, where the stop was, the take profit. When I was marking this out last week, even when it did happen. But to make this as objective as possible, I wanted to see if I would either miss it again or if I would take it differently. Hence, I'm kind of like replaying it to kind of re-simulate that trade. But technically, if I just follow the plan, I should capitalize on it knowing that there's an opportunity in this session. So yeah, we're getting protraction now counter. We've got a time-based liquidity sweep. We're in, deep within the 79% area. I'll be wary of another bullish leg that comes close to here, because then I'll just look for a sweep of that as this parameter here being met. I will kind of no longer be looking at taking the trade within this range. I'll extend that to the larger 1 hour range that we're in, seeing price potentially come up to this point here. Still protracting, slowing down. At this point, I can extend this, but almost say that, look, my trade parameters have been met. If we start getting reversals from this area, then I'll look to go down to entry confirmation, which is reversal candle, shift in structure on the 1 minute, or key area invalidation, key indicator area invalidation on the 5 minute. And then, yeah, look to frame that trade. Slowly coming lower. That is a doji / wick candle. But I think it just depends on what the 5 minute is doing. Yeah, look, for me, we've got this order block here. If we can run through that, then that can be, I'll take that as a key indicator area and validation. 1 minute has not yet shifted. If we look at where we swept liquidity and then where our break of structure level is. So I'll be wary of this. Obviously, we've gotten that, but we haven't gotten this. Just got to wait for this to develop further. Okay, so we've got that break of structure now. Yeah, this happened after, because 1/2 is when the 15-minute would have closed. So still within this order block. This 15-minute now, obviously at 10:45 would have closed. And yeah, I'm going to execute this trade. I'm going to put this position on and let's see how we would have gotten. Just placing that above the 62% region. Obviously 1R, half risk method, 2R done by these lows. close half the position, move stops to break even, and then yeah, our main TP is way down here, which is 12R or so. Can put it there, but I'll probably just be looking for those first two to be met if we get something. So we're in. I just want to look for this to get to there first to apply my half risk method. Okay, so that plays out. So that indeed probably was the position that I had missed. Half risk applied. The next point I'm looking at is those lows there to close 50%. Yeah, and we get there a lot quicker. So 50% of the position would have been closed out, and then stops placed at break even. So effectively all risk off the table at this point now, and we kind of let that run. And I think we know what happens after this. If you've been following pound JPY, price does not get to max TP, will eventually come out and stop me at break even. But I mean, this is running in some healthy profit, some very healthy profit. It's probably ran at that max 2% that I'd bank sometime this week. But then we obviously start to, now we actually, I'll leave. Obviously, I'd set those stops or that profit target where it initially was, way down here. But I think a lesson that I could take away even from this backtesting session is not to overextend, targets on very big moves like this, where I know we're heading down into something like this order block here, where we've now seen obviously this week prices reacted off of. So I know this is going to come out and run me at a break even because price doesn't get here this week. So in future, look at what's to the left in the event of such a long TP, because I am trying to be a bit more conservative with my targets and kind of just observe what barriers are in the way where I can set my profit at that level, the start of this order block, which price would have achieved fairly easily, but it's still a 5-hour position on a 1%, that's 5% on, on 0.5%, it's about 1.8, 1.9%, almost 2%. So I think that's a lesson that I maybe just need to take away from this, because I don't think it happens this week on this, because we play down here for a little bit. But if we just wait for it, eventually price does come in, stop me out there at break even. And arguably this was too good of a position that ran at, a 6.7 R multiple to eventually come and stop me out at break even. There's no utility in that. Yes, I did close 50% at 2R, so I walked away with profit on this at $500 odd. But yeah, no, it's not an efficient trade. There's too much that I gave back to the market in this sense. And so, yeah, I think lessons learned there in terms of trade management. So in hindsight, even though I missed the trade, I didn't maximize what I could have gotten from the position. So yeah, I know I'd said we were gonna do a live analysis, and yeah, I see this potentially coming along, but I think I'm just gonna focus on the missed trades and try to get through those. Because I'm not actually taking any positions, and then maybe we'll see, yeah, how some of these have played out, and then see if there's any potential missed positions here. But yeah, if we continue projecting lower, I'm basically seeing further upside on pound JPY. Similarly for USD JPY, got this order block here that I think I see us coming down into. At the 50% level, so arguably don't need to come down any lower. Pound JPY is, yeah, just needs to come down a bit lower before we are in there, at least for the minor swing. Then that's the more major swing, which I don't think we'll get. And then AUD/USD, nothing here. This has just become a bit messy. EUR/USD also arguably just a bit too messy for my liking, if I'm going to be honest. Yeah, I don't think this was a great session to do a live forecast on. So let's just see how that plays out. But I'll come back to this when I'm done my missed trades. So yeah, that is pound JPY. Can I just put a tick there? AUD/USD long on Thursday, London kill zone. Thursday. That's here. So, as we know from this one last week, this was our minor swing. We were within optimal trade entry area there. If we took it from our more major swing, we weren't even at equilibrium. And so hence we just had this minor swing as just to take a different perspective on it. And that narrative seemed to be the one that played out. We saw this consolidation coming into this optimal trade entry area before then obviously break out to the upside. Seeing this as a sweep of these lows and then that as the displacement higher. Out of obviously this optimal trade entry area, coming down onto the 1 hour, the break to the upside becomes, I guess, just a bit more clear and apparent. And then just looking for a high, kind of a high to be formed. This is pre-London. If I can pull this back from there. There's a very deep pullback. To there, what we do have in this area is this one-sided, yeah, but 50% lies below there, so it's questionable. break to the upside. I can't take that as the hourly range. Definitely taking it from this low point up there. So technically, if we come to the plan, just want to see what we got going on. Price has mitigated EPD. 4-hour trend, we can say, is now pushed pro trend because we've had that displacement to the upside. So we are then, the entry is pro trend to that daily. We can proceed to trade parameters. Within our trade parameters, just looking at if the trade is in alignment with the 1-hour range. We have got that 1-hour bullish range. Price is not yet at EPD. There's currently no protraction. Well, we are kind of starting to protract lower. This is the 15 minutes, so we actually do have that protraction. And then key area mitigation, time-based liquidity sweep. What I will say is if we sweep here, then I'll count that as a time-based liquidity sweep. Sell stops below this area. Obviously, we can pair those with buy stop orders or with long orders, more buy limit orders. So those sell stops and those limit orders obviously balance each other out. And then what we also have here is this 15-minute order block at this equilibrium area on the 15-minute time frame. And so the reason I missed this at the time was because we look at where price is now and we look at where our potential entry area is, because I need to wait for price to get within EPD. And I said there's no way price is covering this ground and then reversing same time to head higher, all in this, in this kill zone here. Because arguably, if we come down that impulsively, I said this area is not going to hold in any case. And that's where my mistake was currently, because price did exactly that. I remember this trade quite clearly. I don't recall if this was the exact area that I'd marked out, but I do remember this position and how shocked I was when it did play out the way I thought it would, because I didn't think that would happen. So we just look at that. So yes, we've come lower. Yes, we've mitigated EPD. We've tapped into this order block, the fair value gap. We've respected it all, and we've reacted higher. Not only on the 1 minute, but also on the 5 minute. And did we get a shift? That's where it gets us. So this is actually not a mistrade, because when I marked this out, I just looked at the 15 minute and I said, look, price should have been taken here. Stops below there, can do a 20 pip stop, and then targeting, it was a 4-hour high level, targeting this area here as a 1:4, 1:4.6. And I said, look, that makes sense. That plays out, because I think we consolidate a bit, but then we end up, going eventually. But if I look at the 1 hour, there's still, at least at the point of entry, if I bring it back here, there's still this fair value gap that's the only key indicator area that we can invalidate to satisfy my entry criteria. So looking at, so now we've obviously got the trade parameters met, the entry confirmation, we got the reversal, it was a large wick, and then obviously price shifting structure on the 1 minute, or invalidating a 5-minute key indicator area. That's the 5-minute area. 1 minute, there's nothing. No structure here. The only structure here is way above here. And if I had to take my entry up there, that leaves me with a 1:2 risk to reward, which is not feasible. And so, yeah, until we technically clear this on the 5 minutes, I can wait to see if we clear it within this session. And if we do, then I'll look at what the 15 minutes looking like. And if the risk to reward makes sense, because that's technically what I should be doing. But then also looking at the time now, we are at 12:50 when we eventually, I didn't time that literally just happened by chance. But now that obviously we see we've kind of closed above it, it's 12:50. I only take executions within the first 3 hours of both kill zones. Well, within the kill zones, which is the first 3 hours of the session, because that's when we get the most volume. And so, yeah, that ship would have sailed at that point there. Arguably there, we've closed. What's our 15-minute looking like, just for argument's sake? Okay, we've got this up here, same TP, it's a 1:3. It meets the minimum criteria still, but it falls outside of my entry area. So this is in fact no trade. If we come back here, that is no trade. And then last position, USD JPY short. Yeah, let's see. Thursday, London kill zone as well. So the reason this did not meet the plan was because this was our daily swing, came up into equilibrium, and we had already, we hit take profit on Wednesday on USD JPY, right? So if I look at where the trade was, Thursday, London kill zone. We had already hit take profit. We're outside of this daily range. And yeah, I basically don't have a trade. This setup's invalid for me because as per my plan, I only identify trades, obviously, once a trend has been established towards EPD within the daily range. Once we get into EPD, then I can trade out of that to the TP. So I can essentially trade within this box here. Obviously, it could come up here. So technically, anything within this range here is go, both for me going up and coming down. Once we are in this no man's land here, or this no man's land here, but arguably that's part of a deeper pullback, which I can then just pull that up there, and then we go for more longs, then it makes sense. But once we fulfill daily targets, we're in a sort of price discovery area, and at least in a bearish trend, not at premium anymore. We're trading in deeply discounted areas, and I don't want to be selling at a discount. I do want to be buying, but to buy, I need a 4-hour counter trend to be established, right? And for that to happen, I need the break of there to the upside. And then I can look to take long opportunities out of, areas and whatnot. So yeah, this you can see 4 hours bearish, so daily still bearish. Hence, buyers still would have been short. Technically within the 4 hour range, which is something I'll maybe look at, once I've gotten a bit more data on my plan, is incorporating these 4 hour ranges into my plan. That 4 hour ranges that fall outside of the daily range. But technically, we're at optimal trade entry within this 4 hour. We've got this order block here, which price may mitigate, may not. But yeah, I can't really refer to my plan because it's not a setup in my plan. I just want to see what the trade was that I missed. And arguably, I think I can see it. But yeah, let's see what we have. We have this area here, which would be time-based liquidity sweep. We are arguably within this 4 hour, but that could also be the 1 hour range. 4 hour order block, 1 hour fair value gap resting above there. One-hour order block there. Trade in alignment with this range within EPD. Will we protract? Let's see. Coming down lower. At the open, we start to trade higher. We are protracting. We've gotten a time-based liquidity sweep. So technically our trade parameters are satisfied. EPD, protraction, time-based liquidity sweep into a key area, back within the 4 hour with that little kiss there. And yeah, I guess now the question is, now just wait for entry confirmation and see. Okay, got that, which isn't very convincing. On the 5 minute, there's nothing because my one-sided fair value gap is here. On the 1 minute, we do have this break here. So the 1 minute is satisfied. Those conditions are satisfied. We had the run of liquidity, break of structure, but I'm not too happy with the 15 minute. So I'd rather wait for double opposing, which is just another bearish candlestick, as confirmation that we are potentially heading lower. Yeah, and we get that. This time, I think the 5 minute may look 5 minutes still respected, but for me, that's enough on the 15 minute to take this. Take that there. Entry will stop above that order block. We'll call it 38 pips. Yeah, and then TP to these lows here. Just targeting equal lows. Still a 5.38 R. If I want, I can just extend that to 40 pips just to even it out. Still a 5.1 R. So now we just look for a 1 R if we can get that. Okay. 1 R is achieved. We can move stops to half risk. and we place this 2R away for our 50% for our take profit 1, essentially, to be achieved. We'll see if we get that. Yeah, very quickly. So 2R achieved, we close 50%, we move to break even, and we can let the rest run. Let's see how that plays out. Price came very close to stop loss. Do we hit? We seem to be holding. Yeah, and we hit take profit. So this then second trade, that met the plan, or well, didn't actually meet the plan. Didn't meet the high time frame parameters. And I guess now I'm asking myself then, why did I not take odd USD, even though I took USD JPY, which didn't, well, odd USD didn't meet the micro time frame criteria, USD JPY didn't meet the high time frame criteria. And to that, I say I do not know, actually. Maybe there's a certain level of comfort. Maybe I'm too focused on the micro time frames, and wanting entry confirmation rather than, the bigger picture to align. And that's something that I need to reprogram, where I need to see high time frame conditions being satisfied as a more favorable area. So like automatically there, like there's a bias there. And I should just take note of that. Just in terms of observations. Did not execute AU long, even though high time frame conditions were met, but micro time frame confluence not satisfied, but did pull trigger on UJ short, where high time frame conditions not met, but micro time frame conditions satisfied. Bias towards execution. Or rather, yeah, I think that's a fairly important observation or something to pick up, which I didn't expect to, because there's actually nothing different about those two setups. But I was more than happy to take USD JPY as like a potential. This meets, from the 4-hour downwards, it meets my criteria. So I'm potentially looking to take this in the future. But odd USD, which is super clean and also played out from a high time frame down, it was literally just the 5 minute and the 1 minute that didn't meet the criteria. And I was like, no, shit, I can't take that. So it's like, why that's what I need to understand now. It's like, do I have this bias? And that's more of a question that I'm asking myself is, am I more biased towards these low time frames playing out? And arguably, that's something that's maybe very common in the retail trading space, is that we focus so much on entries. Like if the entry looks clean and all your criteria are met, then it should be a go. And like we don't place as much significance on the high time frames, which in large dictate how the market's moving. That's the institutional bias. That's the institutional sponsorship that we see, the daily, the weekly, the monthly. If you want to put the 4 hour in that category, you can. But there just needs to be a shift towards looking at more favorable high time frame conditions and being okay with the lower time frames being sloppy, because they will be sloppy in nature. The lower time frame is, a lot of noise relative to the high time frame, which confirms direction, confirms structure, establishes bias. And yeah, I think that's a very important takeaway for me personally from this. I think something else is that I can see that there's these 3 positions that I missed, and at face value, I could say, fuck, I missed 3 profitable positions. But even in this first round of me backtesting it, I would have only taken 2 of the 3 because of everything I just discussed now. But even in that, look, no, I can just say no execution, so there's nothing there. Even in that, I misplaced my TP on the first position, which obviously we fell short of, and so closed out at break even, only banked 0.5%. And on the second one, okay, it was a full TP, so we can calculate that. 5.1R, we know that we close 50% at 2R, so that's 0.5% banked, and I effectively then leave 0.25% of the position open. So if we say 0.25 times the 5.1R that it essentially runs in the full move, that's 1.275 plus the 0.5 that we banked, it's 1.78%. So that's 1.78% that we then bank on that. So plus the original 0.5, it was a 2.3% week, 2.28% that I missed out on effectively for the week, which, look, is still a good amount of profit to leave on the table. And that's something I'm just kind of learning now, and I think it's maybe because I'm, there's a lot of rants, I think, in this backtesting session, because I'm more in like a reflective state than like an execution mode. Is that consistently like banking profit is, and I don't want to say difficult, because that might be the wrong word, but you kind of just need to detach from the noise of what you see on social media, Twitter, YouTube, Instagram, of traders like fucking banking 10, 20, 30%, 37% in like months. Because it's like, and especially when you like just like breaking the surface and like you picking up steam, it's like it's not, it doesn't necessarily go like that. And not to say that's not possible, I don't want to say that's not possible, anything's possible, but more often than not, when you are breaking through to consistency, you are a bit more conservative on your risk. And that just comes back to what I was saying in the beginning. I'm taking lower risk trades, and even though I've banked close to 10R in the past 2 weeks, which if I had taken on a full 1% would have been 9%, and now I'm 1% away from passing my challenge. Yes, that could have happened, but I didn't know that because I don't have the data that tells me that would have happened. Hence, I am more conservative on my risk now. it could have easily have gone the other way, where the 4 or 5 trades I would have taken would have been the first 5 losers that I had on the account. I don't know, because I was just basing it off the data that I have. My data tells me that I can take 4 or 5 positions that are losers in a row. So I adjust my risk accordingly. I'm reacting based on the data. And when you're still building a profitable plan, that is, you will then see a reflection of your data in your results. And that may come in the way of more conservative profits earlier on. And I'm not trying to put a time limit to that, because someone could arguably say, geez, Sam, bro, like you like getting good R multiples up the risk. Even though, I haven't reached my 3% target, if I just base it on what I've seen over the past 2 weeks and I get excited and now I deviate from the plan, deviate from my data, and I up my risk, I could then go and take 3 positions that are all losses on 1%. And now I'm back to square one. And then, what good is it for me then? But if I stay consistent, stay disciplined, not get too excited about seeing all these profit targets and, R multiples, at least on, 2 weeks data, which is nothing at the end of the day. Just follow the plan. I'm pretty certain that I'll pass phase 1. Do I know when I'll pass it? I don't know. Do I know when I'll pass phase 2? I don't know. But I'm pretty confident that, this all leads there. And it's leading there consistently. And somewhere along the line, maybe at the end of this 20 trade data set, when I can say that, okay, at the end of the set, I banked 10R or I banked 15R, and it wasn't a fluke. Maybe I can up my risk, my base risk to 0.75% for this next 20. Once I get to 2%, I can increase to 1%. Small incremental changes like that, backed by data, is what's going to get you that much better, that much closer to the consistency, to the results. You don't just make 20% overnight. You don't make 10% overnight. And as aspiring traders, we need to understand that. We need to hold on to that. Like, it's going to happen, but it doesn't happen overnight. And arguably the hardest part, or the journey kind of only gets harder, because once you start seeing positive results, you almost need to hold yourself and keep doing what you've been doing, because that's what's gotten you there. And try as far as possible not to deviate from the habits and the actions that have gotten you the consistent results, because that's what's going to get you to the next step, is that discipline, that consistency. Don't get too excited. Don't think you're the man or you're the woman now, and you can go gung-ho just because you're seeing 2 weeks of good results. Remain composed, for goodness sake. Jeez. How many times have you lost your composure and gone back to square one? Remain composed at all times. Why? Because consistency is the choice you make when you start doing the things you know you should be doing day in and day out. Didn't get to do a live analysis today. I think this took me a lot longer than I thought it would. But I enjoyed the session nonetheless. I'm going to rest up. Probably won't have any more lives on TradingView. Obviously, you're here for the rest of the week, so I will catch you in my weekly recap over the weekend. Cheers, guys.